Yeah, look, I think this is a great buying opportunity. The reasons for the correction, I think, are highly questionable. Let's also understand it's quite a modest move that we're seeing in markets. So EMs went down at worst about 12%. It's an asset class that, in the previous bull markets would typically correct 20% in any given year and still give you a pretty decent return. So if you think about the issues for the Chinese government, they would like to have a high level of headline growth, but they would also like to improve the allocation of capital, which is the core behind SOE reform. Unfortunately, these two objectives are conflicting, and trying to balance that has been very difficult. At the beginning of the year, there was a lot of talk about reform. And then as the year has progressed, the focus seems to have gone back to that headline growth number. So certainly market sentiment around SOE reform has diminished. That said, I think within the energy and the telco space, there still is a theme in place. The stocks are reasonably good value, so we would continue to hold stocks in those two sectors playing this theme. It's very important in a number of different factors. It reduces input costs for companies. It boosts discretionary income growth for the consumer. In the case of India and Indonesia, it's reduced fiscal risk. These countries have subsidized fuel. What happened over the weekend was India had the possibility to move away from subsidizing diesel. They've grasped that possibility. They've liberalized the diesel price, and diesel prices have actually fallen in line with the market. They are still subsidizing kerosene and LPG, but the magnitude of those subsidies has fallen. In the case of Indonesia, Jokowi has now taken over as president. One of his first decisions he needs to make is to reduce the subsidies on gasoline and diesel. It's obviously easier for him to do that at a lower oil price.